Good morning. When's that housing market crash going to come? Stick around to the end of the video and you'll be able to figure it out yourself. I'll give you some data points and all the information you need to know so that you can make that determination on your own. For those of you who don't know me, my name is Adam Kahn and I'm the Rational Investor. Today is Sunday, September 17th, and I hope you're all doing well. So maybe we'll see a bunch of Airbnbs come to the market to help cause this crash that's coming. A lot of people on YouTube seem to be pointing to the Airbnbs and the investors talking about how they're all going to be in dire strait. New York just passed this new law. It's very restrictive. You have to be in the home to be able to rent it out as an Airbnb. And there's a whole bunch of other factors on there as well. Now, that doesn't include the apartments that kind of are built like hotels. Out here in Vegas, we have condotels where they were intended to be short-term rentals. So those are excluded from the list. Based on an Airbnb Insider, about 22,400 short-term rentals are on the block of what might be put into this category of things that don't qualify anymore. So let's say out of those 22,000, maybe half of them are put in a position where they feel like they need to sell. If that's the case, we're looking at 10, 11,000 homes coming to the market in New York. Well, I got to tell you, based on inventory here in Vegas, 12,000 homes is about the average of what a healthy market should have. Guessing New York, a bigger city, should have a decent size more than that. So 10,000, 11,000 homes going to the market, while it might slow things down a bit, I don't really see that causing a crash. My guess is it could make it a little bit healthier of a market in terms of a seller's market versus a buyer's market, but I don't really see that being any determination of some big crash coming. I'm quite sure in that mix there'll be some very sad stories of people who are tight on their budgets and need to sell. But the reality is, a lot of people who get into the Airbnb business are pretty well capitalized. So it's hard to imagine to me that they would be in desperate terms and just forced to sell. I think this will just be a decision they make when they look at long-term rentals versus what they think the house will do in terms of growth and return versus what they just want to decide with it. Forgive me, I had to move. I didn't like how you couldn't see my face. Not that I think that that's any better now that you can see my face. Maybe it was better the other way. Anyway, that being said, one of my favorite YouTubers, I call him to myself, Orlando the Laughing Hyena. He's got this theory that inflation is continuing, so the housing market's going to crash. Not really sure how he gets to that conclusion from that, because if inflation is continuing, housing would be included in inflation. You can't just take that out of the equation and say, well, inflation's getting worse and worse, and it's going to go through the roof, so you're going to see housing prices get cheaper. That's like saying things are going to get cheaper because of inflation. It makes absolutely no sense, and it's a total disconnect. When I watch his videos, while he's quite entertaining, his reasoning as to why he sees this crash coming just don't make sense. Points to the Airbnbs as well, which I get it, and I get the fear mongering. But to be fair, I just think it's scaring people out of the market. I think you just stay in a budget and make sure that you don't overextend yourself with whatever that is. Now, as I've been getting older, Michael Bordenero makes a great point. I've been moving out of real estate into dividend paying stocks, but that's just because I'm getting older and I don't have the energy to keep up with properties. I still own the one I live in and I still have a few rentals. But, years ago when I was in my 20s and 30s, Airbnbs were fun and interesting and I enjoyed all that extra work, but you got better return. As I've gotten older, I just don't have the energy to do that. He made a point on today or yesterday's videos about baby boomers or people in their 60s. Now, I'm not in my 60s yet, but maybe I behave like that. Generally aren't looking to expand their real estate portfolio, and I would tend to agree with that. While I'm sure there are some, as you get older, it's just not one of the things you want to have to worry about. Now, you guys have to make your own decisions with what you do, whether it's with stocks or real estate or wherever you put your money in. I just think it's a mistake to hope for crashes because they come along very rarely. It's not too often you see a 2007-8 type of housing correction or the type of stock market correction that happened when COVID came around. These things are really rare. And making that bet day in and day out because you're scared of the market is generally a big mistake because you miss out in the bull runs that last, 5, 10, 20 years sometimes. I try to never predict the big next downturn. I try to stay invested and be liquid enough that when the downturns come, that they're okay and they don't put me out of business or put me in a position where I can't afford my bills. I try to invest small amounts and continue to do so to make sure I can weather those storms and just be around to continue for those 5, 10, 20-year bull runs. And I just don't try to time it like that. I agree that housing has gotten more unaffordable, especially when you look at people's incomes versus the prices of homes with the interest rates. However, from what I see, again, this is just what I see. You guys have to make your own decisions. It looks to me like the economy is slowing. The data just takes time to get through. I think the Fed, at least at this next meeting, they'll pause more than likely. I almost think in November they're likely to pause too, but maybe they raise a quarter. But I don't think they really have to go much further from there. And I'd like to think that middle of next year we'll start seeing them having to, not having to, but deciding they have the ability to start lowering rates a bit. And you might see mortgage rates and things like that come down. I don't see them reverting because the market's crashing. I think things might soften a bit as the economy slows, but I think they'll have room to lower rates. You'll see better mortgage rates, and you'll see that hold the market where it is, and then in time we might drift higher again as well. Like, I get where the unaffordability becomes an issue to a lot of people, but not to the people who are buying the homes and qualifying. The requirements for people to qualify are legitimate. It's not like it was in 2005, 6, and 7, where you could state your income. So as long as your credit score was decent, you could qualify by just making stuff up. And then they had these loans for your down payment as well, so you could put no money down, like zero. You could get a 80%, so 20% down type of loan, and then take a loan for your 20% down payment and qualify based on income that you just made up. Well, that isn't the case anymore. They do all sorts of background checks and require you to have income and steady job for a while and everything else, as well as sometimes they actually need you to have reserves so that if things get slow for a little bit, you're able to afford your bills. It's a different environment for who qualifies. So while it's unaffordable to the average person, the people buying the homes still qualify and it's not unaffordable to them, which is really who's more important in terms of a housing market crash. Just because it's not affordable to people not qualifying for loans and not buying houses doesn't mean that that causes a housing market crash. 82% of all mortgages are under 5%, and 60 some odd percent are under 4%. Where are those people going? Why are they selling their homes? Where is this big influx of inventory going to come from? On top of the fact that something like 50% of those buyers are people with credit scores 760 and above. So you have really well credit worthy borrowers. And 58% of them have more than 40% equity in the house. So you have a lot of equity in the homes at low interest rates. I don't really see those people being in some panic because the sky is falling to have to get out of these properties. If what I kind of see potentially happening for next year where rates might come down, it might cause a scenario where some of them think about moving again because if rates get close enough to where they're already locked in, well, maybe they consider making a change. But right now, the problem with the lack of inventory is the Fed's created this situation where people with low interest rates don't want to move. They're kind of locked into their home. Pointing to Airbnbs or some investment properties or some other things might create a little bit of more normalcy to the market, but I don't really see that being enough inventory to cause the market to crash. After 2008, the builders got so stung that they deflated or decreased how many homes they were building because they didn't want to get hit again. We've built at a slower pace the past 10 years, 15 years than we did prior to that, which is why we have a lack of inventory. On top of that, they found that buying affordable homes is not really profitable. Building the small home that people could afford that's less expensive isn't where the money for the builders really is. It's building bigger, nicer homes. That's where they're more profitable. So it's also caused the smaller entry level homes to slowly disappear and go to investors and things of that nature because the builders didn't see it as a profitable route to go. It's unfortunate. I wish there was more affordable housing being built, but it's a natural cycle for a capitalist society. So again, these are issues that I see with a lack of inventory for the average person to be able to get into a home. At the same time, people who qualify can afford these homes. There's less than a 4% delinquency rate, which is exceptionally low. So again, I just don't see a bunch of foreclosures and the things that we saw in the past. And all of the people hoping for a crash, that's a great hope. But if you think about the times when that comes around, if the Fed really causes unemployment, while all the cheerleaders in the comment section keep talking about, oh, I can't wait for it. I can't wait for people to be in that position and see them go through trouble and whatever else, and then I'll be ready to buy. If the Fed causes a ton of unemployment, why do you think you're going to be that guy who's still in this great position of having a good job, good income, some money saved, and everything else when the sky's falling? It tends not to work that way. If there's a big recession, people lose their jobs. They don't have the savings anymore because they've spent it to survive, and they're not necessarily in the position to buy, which is where the wealthy and the corporations come in with the deeper pockets because they're still in the position and end up picking up those homes for cheap again. Uh, I hope that's not what happens. I hope we have a soft landing. And for all of those of you on the sideline, please buy something, but make sure it's affordable. Don't go overstretch yourself because you think I've said go get a home that's going to keep going up. I'm not saying that at all. And again, you need to make your own decision. What I am saying is get in the game so you're not left on the sidelines if it does go higher. If it goes lower and you've bought small enough, hopefully you can manage your payment to where it can still rent out and break even. And then when it goes down and it's more affordable, sure, maybe you can be in a position to step it up and buy your dream home. But I'd hate to see the prices keep going up and up and up and people owning nothing, hoping for a crash because a bunch of guys on YouTube say the crash is coming. They make great data points, but there's lots of things to refute most of it, if not all of it. I understand we're in a weird economic time, the Fed's raising rate, but the Fed's raising rate to try to slow inflation. I'll say that again, they're trying to slow inflation. Housing is included in inflation, which means if they can't slow it, housing will continue to get more expensive. If they can slow it, they slow inflation. That's not deflation. Those are different things. If they go too far and cause a correction, they'll start cutting the other way to stop it from going too far. So let's not get this disconnect of where they are and what their hope is to do. Their hope is to get to a 2% inflation rate, not zero, not negative. And to be fair, I think they've done a really good job. I think the economy slowed. I think as much as people are stretched, that's what they were hoping for. And now with student loans starting again, I don't really see that causing a big influx of property either. I'll use my niece, or I'll call her a fictitious person. Sorry if you actually watch. Let's say she makes just got out of school, makes 50, 60,000 a year, has $200 a month on it. I'm guessing. This is all a guess and a hypothesis. $200 a month student loan payment that's going to start becoming due again. Well, if she owned a property, which she doesn't, I don't see that $200 a month causing her to foreclose on the property. What I see that doing is meaning she can't go out to sushi once a week, or maybe she can't buy Starbucks or whatever it is that she's been doing. that that $200 has been going to. I think it sucks, but I think that's part of the slowdown of the economy and what we see going on. Anyway, do me a favor, give a thumbs up, like, subscribe, tell me where I'm wrong and what you know about the markets, and I'll be happy to discuss it and tell you what I think. Have a great day.